Question one, Doug. Yep, Doug B. How much does a total short position on a company's stock influence your decision to buy it for short-term profits?
So this is a good question, and it can depend obviously on the individual stock and company, but it doesn't have a huge impact on the general selection process. Now, where it might have an impact is if we see the potential for short buyers having to come into the market and buying the stock, and that potentially being a catalyst for us. And that kind of leads in to the second part of Doug's question, which was about the meaning and significance of days to cover. And days to cover is just a fancy term for the measure of how many days it'll take for all the outstanding shorts to be covered at current, market buying levels and volume. So it's just kind of a rudimentary measure of how long it would take the shorts to cover, given a stock's typical sort of trading behavior. Now, that can here again act as some sort of measurement of the potential fuel to a short covering fire, if you will. So it is something that we occasionally watch, and really there are periods of time where some of the quote unquote most shorted stocks are the market leaders. So that is a thing that might factor into our analysis when we might choose to play or not play them. But I think the third part of his question is interesting as well, where Doug asks, is increasing short interest, can that actually be bullish for the stock? And the answer is yes, sometimes. So it gets back to this concept of every time someone's borrowing the shares and shorting them to sell, they got to come back in the market at some point and buy them back. So whether they do that at a higher price or at a lower price, obviously depends on which way the short goes for them. And I think all these are great questions. It's the general answer is it's not a huge factor in our trading selection process on any one given stock. It is, however, maybe a factor that we consider on an individual stock. The last comment I'd make on this is sometimes some of the most shorted stocks are some of the market's biggest boomers. And Tesla would be a great example of that over long periods of time. It's a heavily shorted name and has done quite well. So you've got to look at that data point and contextualize it with a lot of other factors before you use it to try to make some trade decision. P.S. Doug, patience does pay sometimes. And it's particularly when you're holding a great company. So shout out to you on that AMD patience and it paying off for you.
Yeah, thanks for sharing that, Doug. Doug also mentioned he's held AMD since February 2nd, 2023, and it's his first stock to print over 100%. Pretty sweet. Next question from David. When you enter a trade, especially at the open, is decision more about outlook or price? I observe that if I wait 30 to 60 minutes after an open, I can usually get a better price. Thoughts?
So this is a good question, and I would say I don't quite fully understand maybe what he means by price, maybe getting the best execution price. I do think what I would answer, though, is probably more based on outlook. So if if Dutch is hitting something on the open, our outlook is probably pretty positive on the market, and that's why he's doing it. If you are out there trading any size and you are seeing consistently that you might get a better entry if you wait a little bit after the open, I would say incorporate that into your trading strategy. I, too, am not a fan of trading on the open. I'm particularly not a fan of trading on the open on small illiquid names. So if you're trading something large with lots of volume and liquidity, maybe it's not as big of a deal. If there's a small name that's being traded and a lot of people are stampeding into it on the open, that could be why you're seeing a better entry 30 to 60 minutes into the session. And if that's a phenomenon that you've observed and had the time to exploit and execute, I would encourage you to continue to do so. You might find in a real raging bull market, it might not work as well. But oftentimes you'll get a better execution price than after the first 30 minutes of trading or so.
Alex, he had asked, any thoughts on QCOM selling, or Qualcomm selling, CEO selling out 8,000 shares?
These are, in most cases, anyone of any significance at the company, like a CEO or CFO, most of their sales are planned in advance and have to be executed according to that plan. So a lot of times it's difficult to read too much into specific transactions done by executives at corporations. Now, if you see an owner, founder, large shareholder, large institutional shareholder, large long time shareholder consistently exiting a position, that might raise a red flag. If you see an owner founder divesting himself from a company, obviously that's something to question. But a company like Qualcomm with a CEO selling 8,000 shares, that's not really a ton of money. I know it is in the context of average person, but in the context of being the CEO of Qualcomm, not a huge transaction. So my guess is I wouldn't look too much into that specific trade. Probably just part of his plan selling, which is part of him divesting his large holdings of Qualcomm, which he probably does regularly.
From Tim, he asked about the TM. Looks like it wants to head up to March 2022 highs.
So Toyota Motors, it does look pretty good on the charts, and quite frankly, I think it's a pretty well, probably the best run car company in the world outside of maybe Tesla, which you would argue is not really a traditional car company. So the chart here is at the 200 mark on the weekly time frame. Looks like projections are up to maybe 230 if we can break through these old highs. I tell you, you're seeing a little bit of resistance here around 200. I would like to see this 195 mark hold. And if you could probably get in between this 195 and 200, probably not a bad entry point. 91 composite rating. My criticism here would be the group's rating, the relative strength rating is a D. You can see auto manufacturers is 166, 197. So this is not a sector that I like. And sector strength is a really, really important part of what we do here at Carnivore. So don't necessarily dislike Toyota as a company or as a stock. Don't really like the relative strength that I see in the sector. That could improve. Obviously, 166 or 197 is pretty low, so you can see that move up. But look, 200 to 230, maybe a 10% move, and you've got a cup and handle that was playing out on the weekly time frame just a few weeks ago. So I'd say a mixed bag, not really our type of stock, but if you're in it, I can see you holding it.
Alex C again, he asked about AIRE, AIRE.
So I know nothing about AIRE.
Okay.
But I will say the chart looks pretty terrible. Clearly, this is some sort of busted IPO from last year. Maybe a SPAC. I don't know. But we've gone from, it looks like 20 to above 34. This would be the type of stock that you would only trade if you were, highly speculative and maybe you've done some really, really deep work into why you think this is going to turn around from a fundamental perspective. I don't see anything but volume coming out of this, people selling. I mean, the trend's been pretty consistently down. I will say, down here at a buck, it looked like it tried to bounce up, but, this would not be something that we would trade here, Carl.
From Tech, please speak the relationship between volume and a particular stock and how we should weigh that in evaluating. Okay. Yeah. So how much do you consider the volume of stock in, criteria for, is it a worthwhile stock?
So this is a good question. And there is no sort of one size fits all answer to, hey, do these shares that we're recommending have enough volume to support the carnivore stampede is the question that we're trying to ask ourselves at all times. There is no specific, answer other than we try to stay out of things that are less than $1 billion of market cap and have floats that are, of a certain size and just don't trade that many shares per day. What I would say is that the smaller a company, the smaller your position should probably be, because obviously it's more difficult to get in and out of. If you are a small trader, this is probably not a huge concern of yours if you're just throwing around a few $1,000 in a position. If you are of any size at all, you're going to want to be really careful with market orders at the open on low volume stocks or low market cap stocks, because that's where you're going to get eaten up on execution. So the rule of thumb, guys, is to look at the market cap and say, hey, if it's above 10 billion, there's probably enough float out there for me to get in and out of it pretty easily. If it's a mega cap name, there is. But if you get down below 10 billion, you might want to do a little bit of research into the float number of shares outstanding. And then if you get below $1 billion, you need to be real careful. Because getting out of that in any size is going to be something that does have execution risk. And, I think we'll speak to this more on the calls in the future, but the general rule of thumb to keep yourself out of trouble is don't buy big blocks of thinly traded small market cap stocks. Let's do AVGO.
Yeah, do that. Can we do that for Daryl D?
So AVGO, guys, Broadcom, this is a semiconductor darling and a longtime favorite of ours here at Carnivore. We don't trade it a lot because it's a $1,200 stock, more of a holding stock. We have run up here pretty far away from the base, and the breakout now has kind of put it out of what I would say reach. We're 7% from the pivot in 5 days. So this would be a name that I would be a buyer of longer term, but I probably wouldn't be a buyer just here yet. If you could get a pullback back to 1,200 or lower, that might be a better entry point. You can see it's got a 96 composite rating, A on timeliness, and is in our favorite sector, semiconductors. Also, you can see on the monthly that has just been an incredible stock to be in over the last few years. So yes, long term. Shorter term, I would look for maybe a better entry point.
You're concise, love it. Thanks, Daryl D, for the question. Do you still believe in STNE long term? That's from Greg W.
Okay. Yeah. So look, I think this is an interesting company. I do think that this is a very competitive space, and I don't know that over a very long period anyone can hold on to their competitive advantage in a way that is meaningful, like a Visa or a MasterCard has of those franchises. However, this is a Brazilian company. I think that technology itself in some of these developing economies, these payments are really still exploding and growing. So I would tell you that it's an interesting play in the space, probably in the right geographical area. $5.6 billion, company could potentially be a much bigger company if it sort of becomes, a blue chip merchant and integrated, payment solutions down in Brazil. And I think the potential exists. So we had a nice volume pickup here back in December where we broke out of this cup around 14 or 15, ran up to 18, and been trading sideways. Like a lot of names, been bouncing around here since you've done that, but I actually still think this one has some legs. I'd like to see this relative strength improve. The group's sort of relative strength is pretty poor, 164 out of 197. So not necessarily in the right group or space. Probably a pretty good company. I'd like to see the relative strength improve, both on the individual stock basis up back to 99, and then see that group rating improve, and you might be off and running up to 20.
From Dave G. What are your thoughts on where NET is heading, NET? I've been sitting on shares for quite some time. Thank you for all you guys do. Thank you, David G.
So Cloudflare has been a stock that we've traded in the past. You can see here on the weekly, we just broke through that 80 mark, which had kind of been resistance a couple of times here on that cup formation. You can see it was below 80 for almost 18 weeks. Peak for the stock was 200 back in the run up into December of 21. So, look, this stock has all the attributes that we're looking for. It's in the right sectors, computer software, enterprise level, 22 to 197 sector rating. We've got a 99 composite score. So you check all the boxes. I think the only thing that might be missing here is just a little bit more relative strength on the individual stock level. So we're at 94. You'd like to see that move up. Maybe some more volume come here. Fundamentally, I love the company. Great story. You can see the 76 mark ought to serve as support. So here again, a lot of these stocks have run up and maybe are basing out up here above the pivot. You can see we're about 8% above the pivot. We have been for 39 days. I would say, you could accumulate around 80 in anticipation of this continuing to move higher in a bull market. Looks like the system has a target of about 95. Yeah, so I would say at the individual stock level, we want the relative strength to improve a little bit here. We're at 94. You'd want to see this start coming up, going higher. You'd want to see a whole 76 if you're already in it. It did it here. You can see it tested. We're about 8% from the pivot. So you've run up to 86.91, and then since consolidated, the moving averages are moving up. I mean, this would be the type of stock you would accumulate in the right kind of a market. The only thing I think that's missing, what I was saying, was the relative strength could probably improve a little bit here.
Right on. So on a side note, did you hear all the Cloudflare drama this recently?
Specifically about there was some kind of hacking or something?
No, this is a social media drama. There was
Oh no, I hadn't heard about this.
all right, so there's a girl who was getting terminated. They were doing layoffs a lot there. Recently.
Oh, I saw that clip. I didn't know she worked for Cloudflare.
Yeah, Cloudflare.
Huh. So
Yeah.
they were basically terminating her for cause, but it was really because they overhired.
Well, so here's like the big narrative. It's really interesting. I've been kind of ingratiating myself with Gen Z kind of thought process culturally, and yeah, dude, they are like reeling against like just big corporations and even like big tech. People get really, how do I say this? Tech companies are under fire from like young people because the narrative is that they so frequently, and I kind of agree with this, they very frequently overhire, overscale, try and do shit too fast, realize they made a mistake, and then they'll just lay people off, and they just don't really have a reason or anything. Yeah, basically.
Yeah.
So she recorded her being terminated, and she had a whole like back talk with that, and that kind of just took off, and yeah, and basically, social media is dominated by kind of like that narrative right now. And it was a whole big thing. So
yeah, I mean, look, man, even Microsoft has fired 10% of their gaming division because of Activision Blizzard, and look, man, here's the danger for working for a big company is at some point when you get older, you could just be one of those 10,000.
right.
And it's pretty indiscriminate, and there's very, very little loyalty. I've seen people, work their entire careers for a place and then just kind of whatever, you're canned.
Yeah, it's a common thing people talking about these days. There's a lot less this generation coming up kind of like watch their parents work forever and then just get ground into the dust or thrown away.
Yeah.
There's a lot more people who are like, fuck loyalty to big companies or, any of that kind of thing.
I think, loyalty is purchased.
So, right.
So, I read a great article that talked about why Walmart pays its truckers so much. And Walmart pays their truckers like $160,000 a year.
Yeah.
And they're like, fuck it, we got to have people that show up and do it right every day.
Right.
And we found that if we pay these people $160,000 a fucking year, we get those kind of people.
Exactly.
So it's kind of like, Costco employees, man, they work there forever. Well, it's because fucking pay them and they get stock. Like, I don't know, man. I think this whole idea of, you're going to work for somebody forever and then them kind of kick you out is kind of sad. But anyway, we digress. I didn't know that was Cloudflare. I'm going to go back and watch that thing again now that I know that that's the company.
Oh, yeah. It's whatever. It's kind of just, mixed opinions on it, but
yeah.
Speaking of opinions.
Well, hey, look, for stocks, it's often a good thing when they're firing people, dude.
Yeah, so I was going to say as far as this goes, yeah, it's probably a good thing that there's market correction for mistakes made. It sucks.
I mean, look, the Meta stock bottomed and took off as soon as Zuckerberg started killing all the fat, man.
Yeah, man. Really curious, actually, to know your thoughts on X sometime. Whenever you want to dive in on that.
We can spend the day talking about that, dude.
Okay, let's do that separately.
Yeah,
I want to do that. All right, so opinion on MKSI. That's from John K.
MKS Instruments. I think we traded this one a long time ago. Part of this resurgent semiconductor trade, you can see, it looks like we got a double bottom. The system is flagged. Like how we've exploded through the pivot. Looks like the system wants to target a 130 mark. I don't know this one fundamentally. I do know this score doesn't really stack up all that well. So this would be one that I might treat more as a trade. Although, like a lot of these semi names, they appear to have set up nicely for a further run. So if you're bullish semis and you're already in, kudos to you. You're not that far away from the pivot. You can see right there, 3%. So you're still within range of the pivot. And we've got a double bottom pattern. It's pretty clear. Don't know it fundamentally, so won't speak to that. But technically, it looks pretty good.
Love it. Thanks, John K, for the question. And Russ W asked, do you see any opportunity in TXN?
You know, I had mixed emotions about Texas Instruments. You can see from a relative strength perspective, pretty poor. There are just so many other names within semiconductors that are performing so much better. I find them more interesting. And quite frankly, if I were going to say legacy semi plays that I'm kind of warming up to, Intel might be the story, just because they're doing so many things to try to turn that ship around. So Texas Instrument, obviously not the same business as Intel, similar category. You can just see there's other stocks out there, you know, even Taiwan Semi itself with an 89, just better scores than TXN. Here again, I don't necessarily think that it doesn't have upside potential. I just think there's more potential within other names within semis. That's probably where I would go instead.
Kirk M asked, do they have any customers beyond Walmart? This is not a technical analysis question, obviously.
You know what, man? I'm gonna have to dig deeper. And what I would tell him, my almost response is, do you need another customer beside Walmart?
Well said.
Hey, tell him that we're gonna do a written response to that.
All right, cool. Alex C asks, why look at the IWM rather than RUT, Russell? So why look at the proxy instead of the...
Okay, so good question. I didn't answer it last time. If you'll notice in the wrap, we often use the Spider ETF, the Qs, which is really just the NASDAQ 100 as a proxy for the composite, and the IWM for the Russell. And the reason being is because those are the instruments that you actually trade most of the time. Most retail guys trade. So we just use those as, you know, tracking vehicles because they're actually the instrument that someone would go in and out of versus a hypothetical index. That's the short answer. We look at all the indexes too, and their charts and the technical analysis as well, but we just also look at the ETFs and we chart with the ETFs.